Hey guys, Heather GammaEdge here, coming at you with a post-market recap for August 18th, 2025. If you were away from the market today, you didn't miss much. As we oscillated in a tight range, 64.50 really capped the upside move for a lot of the day. We'll get into why that level was identified in the pre-market was a significant level. We'll also get into the intraday tools that told us it's going to be a range-bound day most likely. So with that, let's get into it. Right, so as background every morning, right, we have a robust pre-market prep process on the SPX game plan. This is documented in the Discord. Not only that, but we go through YouTube Live every morning as well. So I'm not going to go through this all because you guys can go watch that video. You guys can read this. But the TLDR, looking at SPXA, looking at SPXP, calm dominant environments generally. So that is kind of a good backdrop on a multi-day to multi-week kind of swing trading time frame. But getting into specifically the 0 DTE, right thing we noted coming into the session was the relatively small and defined transition zone. Drunken Sailor top of that range was 64.50. So right, that's a key upside level. To the downside, 64.35 was a key downside level. So within that zone, right, that's how we define our transition zone. As we say every time, transition zone, in layman's terms, you're just going to see a lot of choppy price action because the structure is transitioning from call dominated to put dominated back and forth. Right, and we mark those as two key goalposts where we're going to need to see a significant activity on an intraday basis to propel us through that zone. So, right, if you think about it, the top and bottom of the zones are weighing on the market. Top of the drunken to the range kind of weighing on like a weight on the market. So again, hence we're going to need to see that intraday push to propel us over that level. And the way that we observe that is both through our market trend model. Let me pull that up. Sorry, we're on the other screen. This is what it looks like. So Friday kind of lost a short-term moving average ribbon. So on a intraday basis. Or let me rephrase that. The shortest term time frame, a little bit of a pullback that continued today, but net, this is more or less just kind of a modest pullback in the context of a longer term uptrend. If we would start to break through, sorry, I lost the annotation tool. If we started to break through this, the colored moving average ribbon, that would start to be a lot more concerning as to the structure on a multi-day to multi-week time frame. But right, purely from a 0 DT basis today, it was, very modest selling throughout the session, but it was a pretty, like meh session for lack of a better term, and price action itself too was just very choppy as well. But anyways, getting back to it, looking at those key transition zones. So we went this over in the pre-market prep, right? We had these levels established: 64.50, 63, 64.35. Those were the key transition zone. You can see really we never broke out of that transition zone at all today. 64.50 was kind of a good overhead level. Corresponded with prior day close as well. Right, and then not only that, kind of more importantly, we understood right pre-market what the structure was like, where those key levels were at. But then once the bell rings, folks are transacting, and that is going to have implications on price action as well, obviously. And so what we can see from this analysis is our SPX 0DT analysis. It's called Vol-M if you're in the community, new to the community. But simply put, what we're looking at is we're looking at the trends of speculation, both with call speculation as green, put speculation as red. And so what we do on a 5-minute over a 5-minute basis is we batch the volume for call side and put side. We get the distribution, find the midpoint of that distribution, which is a centroid, and we plot that. So we plot that throughout the session for two reasons. One, helps us understand price action to that certain point in time. So from the open to, whenever noon, we can understand these are what the centroids have done. So today was a very classic choppy price action. There's no expansion higher in the call centroids. There's no expansion low in the put centroids. Not only that, what we do is we project out where those centroids are going to go based off of what has happened in all things equal. Because remember, price follows where transactions are happening. Price is not going to go where there are no transactions. So again, that's why we project out what those centroids look like. Right, and just so you can get a better understanding of what that looks like kind of on an intraday basis to make it actionable, this was at our 1235 cut of data. You can see right from the open until 1235, we aggregated all these centroids both above and below. So right, it tells us A, very choppy price action, very choppy speculation, and B, all else equal, that the centroids are going to continue that path. Now keep in mind that these chopsticks never actually finish crossed, right? Generally, what happens is as price continues to chop, these centroids more or less just kind of flatten around it, unless we see, for some reason, calls start to spike higher, puts start to spike lower, have a rolling over and acceleration higher, which we did not get today. So again, this is what I mean. Fast forward an hour and a half. This is almost 2 o'clock. You can see those centroids, very kind of tight pattern projected into the day. Point is very tight as well. And so, right, all this to say, tool is very useful on an intraday basis, especially with formulating strategies as we get kind of past the London close and in the afternoon and into the close. Really, if you're looking for, we had people selling iron condors today. Friday was a big butterfly day in terms of where the expected move is and where potentially there could be a pinning. And then you take that in context too of our structure analysis, understand where those key levels are at. Very, very beneficial, kind of powerful 1-2 punch there. And so yeah, at the end of the session, what we do is we create a GIF of all those 5-minute snapshots throughout the day. And really, just watching this quickly, it's really just a very flat price action. You can see what I'm talking about with the chopsticks. They don't stay crossed forever. They just eventually start to flatten out. The distribution gets very, very tight. And right, that so all I got for you guys tonight, short and sweet, choppy day, but really the point of the video today was how we got from our pre-market prep in terms of analyzing the SPX 0DT structure, getting into those key really transition points. And we did have if then on, if we started to see an acceleration higher, what those key strikes were at, and see its acceleration lower, what those key strikes were at. But really today we just never made it out of the transition zone. And then couple that with our intraday volume analysis with the market trend model, and hence we had the day that we had today. Then lastly, just wanting to go over some single stocks real quick. So what this is the Mag 7 components. I know it looks like a lot, but it's just 8 charts. We have our scripts overlaid for TradingView. These just have our key levels on it. This is the full complex, so it incorporates every single expiration into it. And really here too, we just see a lot of choppy price action, just a lot of kind of flirting with all the P-trans levels, really not able to break away from it. So yeah, those are just things that we covered in the pre-market as well. I think that what we said today was, a lot of stocks were opening kind of in the middle, no man's land between PlusGex and P-Trans. So not super interesting. Generally, we want to see, Tesla actually had some nice interaction with P-Trans today, held 0gex P-Trans. Maybe we start to see an acceleration higher, but nonetheless, those are some good key downside levels for folks interested in that name. Apple flirting with P-Trans at 230, something to keep an eye on. Google not able to get above P-Trans at 205. So yeah, just good key levels of risk here. Meta, really don't want to see that lose 765, or we could kind of see a move lower as it starts to get in that put dominated territory. But nonetheless, you guys get it. The reason I show this is just showing that our methodology, while we do a lot with SPX 0DT, because a lot of people are focused on that, but what we do is fractal in nature, so it can be applied to really any instrument that has adequate, sufficient, open interest volume in terms of the options market. And then also can be applied on any time frame as well. And lastly, if you're new to this stuff or it's just not quite clicking for you, GammaEdge.us, we have a ton of free resources. We've put out over 20 blog articles this year. We have the GammaEdge Fast Pass, which is our key free course, but really it's everything that we teach the members when they join the community. In terms of our entire methodology, trading strategies, how to use all of our key tools. Don't really hold anything back from you guys. Because ultimately what's in it for us is you guys need to learn how to use our stuff, unlock what it's telling you. And then you come to us every day for updated data. Just being transparent with you guys, that AWS beast is expensive to feed, got to feed it. But what we believe is we've built something of value. So don't feel bad at all, building these free resources for you guys, hoping that you take advantage of it. If nothing else, maybe you guys get something out of it, benefit your trading in the future, whether with us or with someone else. So with that, finally done. Appreciate your guys' time. You guys have a good night. We'll see you tomorrow. Thank you. Bye.